Good morning, guys. Welcome back to another trading session. Well, I hope you're doing well today. It is Thursday. We are almost closing the week here, and it's a Thursday pre-NFP. So today, it is advisable for you guys to just tape read instead of actively trading, and I will explain you in some minutes why you should do that. Well, first of all, I hope you're doing well. I hope you had a great week, and yeah, and I hope you you just managed to do well this week, because honestly, the price action on this NFP week has been kind of crazy. Well, looking into the 15 minutes, you can see that we are inside of some kind of a consolidation here. Price is just generating liquidity. For those who don't know, NFP stands for non-farm payroll, and it's a important and big news driver that happens every first Friday of the month. So usually you should have a strict protocol in order to approach this week. I told you in some streams, yes, and on yesterday's stream, I told you that you guys should close your trading week on Wednesday, New York AM session, and yeah, the Wednesday New York PM session, and eventually the Thursday and Friday should be a non-tradable day. You should only take trades after NFP on Friday. So looking into the 15-minute chart, you can see that, yeah, we are just consolidating, generating liquidity. Some minutes ago, price just went crazy. There was no news driver, I believe. I just searched for it and I've seen nothing. But price suddenly in a 1 minute candle, it just shot up about 0.5% and about 36 handles. So yeah, but this shoot to the upside. We took out previous week's high, but we are, as you can see here, we have a lot of liquidity here below still to be taken. And honestly, today we'll only be tape reading and helping you guys eventually to understand what's happening. If you look into the intraday price action, you see that Asia consolidated. London is usually the manipulation, and whenever you have some type of price action like this, it is usual for price to distribute in the other direction that London presented us. So if London manipulates to the upside, it is usual for price to distribute lower in New York AM. But since we are in some kind of a liquidity generating week, it might not happen. So in this case, if you look into the intraday chart, we already took London lows here with this candle right at the 8:30 open, and some minutes after we took London highs with this displacement to the upside here, taking as well previous week's high, which was the main draw on liquidity. I was pointing this draw on liquidity yesterday, and eventually I took a trade here looking for that type of liquidity. But since we are already in some kind of NFP week, it doesn't it did not deliver. So right now the draw liquidity is taken. London highs and London lows are taken. Asia highs and Asia lows are taken. So we have no draw actually. And that's why you should not eventually take any trades today and just tape read. The most logical thing that can eventually happen here is price reaching for this week here that was left behind. But it is not certain, honestly. It is not certain. I can eventually frame this as the 9:30 draw on liquidity. But yeah, honestly, I will not take it. And I will only tape read it, and yeah, just taking some schematics to see what price really wants to do. We have no news for the rest of the session here, so I will just mark the most important levels here. Right now we have 9:30 open, displacing to the downside, as you can see here. So expect things that are not logical to happen, and expect price to behave in a strange manner, in a strange form here. That's quite usual for pre-NFP price action. So that's why I will just tape read it and eventually not taking any trades here, just to keep my discipline and keep my consistency on the market. So right now, price just displays to the downside right at 9:30 into this fair value gap here. Notice that we have event horizon right at the bottom of this fair value gap here. We have another, if I zoom out here, you can see another N walk here and another N walk here as well. So price almost reached for this new week opening gap here, but got rejected right away. And now it is marching to the downside, trying to do something. But yeah, it's kind of hard to frame anything with this type of conditions. And since we already took the main draws here. It's hard to do something, honestly. Boa, João. Tudo bem? Thank you very much. Thank you very much. Yeah, I have some Portuguese mates here as well. And I'm glad to see them. Honestly, it's always good when we have some Portuguese mates here. So don't mind if I talk a bit Portuguese. That's my that's my mother language, and yeah, just let me frame this. I'm looking at NQ and ES. NQ and ES, as you can see, NQ and ES are kind of asymmetrical here. ES is pushing to the downside here, trying to explore the bottom of the fair value gap, while NQ is already somewhere here where I'm pointing at. So yeah, it's it's kind of frustrating. And whenever you have ES and NQ doing some asymmetrical job, some kind of an asymmetrical job, you should take into account that you are playing with low probability conditions. So even if a setup presents, yeah, you should know that that type of a setup is a low probability setup. So keep that in mind as well. Here on ES, I'm waiting for the first presented fair value gap. So just let me mark the first presented fair value gap here. So the 930 open is actually here in this candle. And yeah, we have the first presented fair value gap here, which is a bearish one. Yesterday, I explained you why you should consider the fair value gap after 930 and not a 930 fair value gap. It's due to the opening volatility. You should not consider that one. So you should consider the one that follows the 930 candle. So right now we are just observing and yeah, taking some notes from price action and looking what it really wants to do, but it will be hard to frame anything. So price now moving to the downside. We have the low of this actual 4-hour candle here. Yeah, João, it's not. I mean, today is not the day where you should make or try to make money. You should observe, because tomorrow we will have NFP, and I believe that if we take any action here, we can eventually be the liquidity providers. And I'm not interested in be a liquidity provider for the market. So that's why I'm just tape reading for today. Actually, this stream might be a not that long of a stream. I usually tend to stream for 2 hours, because the attention span and the focus span, it's if you try to stretch it after 2 hours, you will see that you will get tired and you will try to force things. And I will try to probably we will end the stream sooner today, but yeah, uh, tomorrow we will have some more action and eventually some clearer action as well. So far, the first presented fair value gap is being respected. Price is moving to the downside here on ES, but if you look into NQ, NQ is it's somewhere here. right below the first presented fair value gap. So we are kind of asymmetrical. So João, where you from? Yeah, I know that you might be Portuguese, right? But which city are you from? I'm from Aveiro, by the way, and I'm streaming right from Aveiro. Oh, you're actually from Aveiro too. Okay, that's cool. That's cool. From Aveiro Center or somewhere nearby? Because I'm right at the center. Oh, yeah, I know who you are. É o João, o namorado da Ana. I didn't notice your picture. Obrigado, amigo, obrigado, pá. Eu não reparei na tua foto, pá. Espetáculo. So price really moving to the downside here, taking sell side liquidity as the 4-hour candle low here. Notice that we have a big point of interest here down below, 4-hour bullish fair value gap that should eventually hold and act as some kind of a trampoline. Um, in normal conditions, we should expect something like this. Price moving here and supporting here, eventually forming a new low and then displacing to the upside. But yeah, since we are in these types of conditions where price is really just consolidating, we might eventually take out the lows and keep digging to the downside, or eventually do what I'm expecting it to do, which is moving down here, gathering some support here, and then move to the upside. Because this week here, whenever you have some type of wicks like this, you can eventually expect these types of wicks to be retested, and usually they are retested at their 50% usually, but you can eventually expect them to be fully retested here as well. So as you can see here, a new low was formed here. So I will move this because we are still in this 4-hour candle. Price already reacting to the upside. We have a bearish fair value gap here. And now I would like to see if this one gets respected or not. If it really gets inverted, we might eventually expect price moving once again to the first presented fair value gap here. If it gets respected, then we shall expect a move to the downside. So looking at NQ right now, NQ and ES on a 15-minute, they are presenting some type of SMT in between. Just let me do this with some precision here. Yeah, ES and NQ are, as you can see here, we have some type of an SMT, which means that NQ was not able to do another low here, while ES made another low. And this can eventually be a signal that price does not want to move lower, and it really wants to keep grinding to the upside. If you look into these highs here as well, these highs here, these are relative equal highs. And usually these types of highs are formed when everybody is trying to sell. And yeah, they are profiting right now. But there's a problem with it. A lot of stops are being placed here. And usually the algorithm tries to punish and move into the stops, because this is liquidity here. This is a free form of liquidity. So everybody who's shorting right now is making money and protecting themselves with their stops here. And usually the algorithm tends to attack all these stops. But we have to wait for some more confirmations here. If you look at NQ, NQ is trying to recover from this downfall here. So you're long on gold since 3376. Just let me take a quick look into gold. So gold, micro gold, yeah. So I've not been looking at gold for a long time. 3376. So let me just put this in a higher time frame. Let me just start with the daily. Seven, six. Three, 376. Well, actually, gold has been a commodity that has been in an uptrend for a while now, because of all these types of rumors about war and everything. See, these were my last annotations, June 2024. So I'm not looking into gold since then. But yeah, let me just check it in a quick matter. Yeah, everything seems to be bullish on gold. So this inefficiency here was really respected. But here I might accept that gold may try to consolidate a bit here, forming and generating a little bit more of liquidity, or eventually another push to the upside, or eventually for a move lower. Let me just check the weekly. Yeah, there's a lot of liquidity here below. But since we are respecting bullish PD arrays and bullish order flow, I believe we will eventually face higher prices on gold as well. But it all depends on how do you trade it. If you if you trade it in a swing way or an intraday way, or yeah, it all depends on that. On the 4 hour. Yeah, João, I know what you're saying, but I really don't trade that way. Um, that was the first years of trading, where I was looking into um, EMAs, and Bollinger Bands and all that stuff. But if you like trading, I advise you to look into ICT and ICT concepts. And he explains everything in a market maker perspective, in smart money concepts as well. Um, so everything is uh, everything it's explained in a logic where price is run through an algorithm, and the only thing that the algorithm does is seeking for liquidity, and you just have to identify where the liquidity is, and as soon as you identify where the liquidity is, probably the algorithm will tend to drive price to that liquidity. And by liquidity I mean these types of inefficiencies here, the stops. Imagine if you were longing. I suppose that if you are long from, let me just check here the number once again, 3376. So if you are longing from 3376, you probably have your stop somewhere here, right? Um, or eventually, it all depends how do you manage your position. But if you have your stop here, the algorithm tends to seek for that stop after taking liquidity above it. And where's the liquidity above these stops? The liquidity is here, eventually above this high as well. So usually the algorithm tends to drive price from liquidity to liquidity, or from inefficiency to inefficiency. There is a lot of if you look into ICT concepts on YouTube, and especially on YouTube and Twitter, you can find a lot of videos. Some of them are quite exhausting. Some of them are, I don't know, 3 hours long, and yeah, they he tends to he tends to do a lot of videos. But I found that those concepts are one of the best to trade the markets, especially the future markets, which which I like them, which I like. And why do I choose the future markets? Because they are kind of more regulated than the other ones, like the commodity ones and the forex. And yeah, you don't have different prices for the same thing. Because if you look into, I don't know, if you look into Olanda's price or XTB price for gold, you will have different prices for gold. And it all depends from your broker. And it does not happen on futures. Futures are regulated. You pay the same price for each asset, and yeah, everything is the same. You don't have slippage usually. If you open a position, the position is opened right at the tick where you click the button. Um, and usually that not happens if you trade commodities or forex or something like that. Sometimes you, especially on forex, if you try to play forex on the 1 minute, you will get killed. you will get burnt out. You will get yeah, everything. It's it's very hard because the brokers will, I don't know, if you imagine that price is somewhere here, right? And you open the position right here. You click the button right here for, I don't know, a sell. Um, in reality, you will open your sell right here. Uh, and if the price of the asset just keeps rising, yeah, you instead of, I don't know, losing 100 euros, you will lose about 200 or 300. Yeah, that's quite annoying. So keep that in mind. You only trade gold and BTC. Yeah, yeah. BTC is always a good asset to trade. Probably not in the condition that it is right now, because it is just, as you can see here, BTC. This is the futures of BTC. But if you look into it on the higher time frames, yeah, it's kind of what will what will it do next, right? It's kind of, it took out, it really didn't took, it just left this high here. And yeah, it will probably get to this um, inefficiency here. You have some relative equal lows here down below as well. So the most logical thing is price will gather some liquidity here below, eventually retrace once again, eventually taking out these lows here. And yeah, probably. I don't know. So let's go back to S&P. So meanwhile, S&P really came to that 4 hour fair value gap, which is a point of interest. It really respected it. And as I told you, if we if price really respected this fair value gap, it could go lower, and it's really doing it. So right now, I will mark another bearish fair value gap here and see if we can get that retrace that we were looking for. So this is a new, this is a new 4 hour candle low. I will, this SMT got invalidated here. And right now, ICT concepts also mention some time windows, which we call them macros. And macro, and the first macro is the 950 to 1010. The 950 to 1010, the macros usually tend to be a time window where price is fueled with steam, and it's fueled with eventually gasoline as well. And something happens here on in between those time windows. In this case, or price will go lower here if it continues to respect bearish PD arrays and bearish forms of inefficiency, or eventually can form some kind of a inversion, since we are in a higher time frame point of interest. If you look into price since 9:30, it really came down. Smaller retraces here. So keep in mind that as soon as 9:30 opens and price really starts to run, if you have a one-sided run since 9:30, always, but always keep in mind that that's a bit strange because everybody is making money right now since the open, and that only happens when things are not in a usual way, I would say, because the algorithm tends to punish everybody who is making money. So if you see some kind of a run since the 9:30 open, and this is a one-sided run, always keep in mind that somewhere inside a macro, it can deliver some kind of a inversion, or it can eventually dig lower since we took the biggest point of interest already just before 9:30. So far, we have a bearish order block here, protecting the price to the upside. If price really digs higher here into this point of interest, into this inefficiency here, the bearish fair value gap, and if price can eventually dig some support here and form some support here, I can consider a move to the upside. We got rejected right now at the midpoint of this fair value gap here. So this is the new 4-hour candle low. But for a inversion, or for a some type of a inversion to happen, I need to see some displacement, some bigger candles, some speed to the upside. Otherwise, it is just retesting this order block, which are these 3 candles here. And it is acceptable for price to come to the midpoint of them, which is here, the second one, and then coming back below. So let's see. If you look into NQ, there's another SMT on NQ and ES as well. So yeah, João, if you're actively trading, and especially day trade, keep in mind that tomorrow we will have some big news driver, which is NFP. try to avoid that time of the day. If you look into, let me just check here. Yeah, you might already know this, but I will share it with you here. You have Forex Factory where you can see all those news driver events. And tomorrow there's a big one. Yeah, try to avoid those and try to avoid NFP, especially the action that occurs in a pre-NFP. Yeah, Forex Factory is one of those OG sites where everything is is presented in a simple way. And yeah, you have the scheduling for the week, for the month, and as you can see here, tomorrow at 1:30 p.m. Portugal local time, you will have non-farm payroll, which is always a big news driver, and it can eventually drive price into something crazy. Yeah, so far the order block is being respected here, so price is trying to get above it, but I would like to see some, for a reversal to happen, I would like to see some kind of a push to the upside here. Otherwise, we are meant to go lower because we have another point of interest here, which is the new week opening gap. ICT uh, ICT shared with us that the new week opening gaps always act as a magnet on the price. But since we have this 4-hour fair value gap here, um, this should be a bit more stronger than the new week opening gap. And yeah, the displacement that I was talking about, so some displacement and some speed. Let's see if we got that inversion that we were some kind of expecting here. These lows formed some kind of an SMT in between ES and NQ as well. So an SMT inside a 4-hour fair value gap, it's always suspicious. And when this is formed inside of a macro, you should consider it and eventually look for some type of an inversion here. But it can happen that price does not have the strength to go to the upside. This green candle here, if we support above it, this green candle here can act as a breaker, which is a reversal structure. The price really supports here. It can dig a little bit lower, but if price does something like this, we can eventually expect everybody that's selling here to be punished, and eventually expect these relative equal highs to be in target. But this structure needs to hold, otherwise we will go lower. So let's see. If you look into price to consider longs, notice that price is below 9:30 open, below 8:30 open, and below midnight open. So these are 3 points where price opens, and usually when price is below, it means that it is in a discount area. If price is above those three opens, it means that it is in a premium area, which is premium to sell, and in a discount, it's good for a buy. But like I said, we need to see this structure to hold in order to consider any type of longs here. Otherwise, we will go lower since we are respecting this one here as well. So there's a lot of conflict here in between these inefficiencies. That's why you see this zigzag back and forth. So here you have a clear rejection of this breaker. So I will take this out. Doesn't make sense. See, price is really facing some congestion here. It has a lot of how should I say it? It has a lot of I'm missing the words. um, it has a lot of conflict here because it is right below or right above a bullish fair value gap here, which is a if I look into the 4 hour, you will see what I'm talking about. See, there's inefficiency here. There's inefficiency here. If I take out this, there's a blank space here in between these three candles. So the price here never reached the high of this one. So this is a bullish fair value gap. And this should act as a trampoline or a support for bullish order flow. So whenever price reaches some type of structure like this, it usually tends to boom to the upside. So if I zoom in, the structure is here, and that's why price is really trying to struggle, try to find where it wants to go. Take this out here as well. Yeah, so far the 950 to 1010 macro didn't give us anything. I call them empty macros, where price is just struggling to get out of this zone. Um, it can eventually happen. It can eventually happen. We will have another macro in between 1050 to 1110. And why these time frames? Why these time windows? Right. Well, these time windows always marks. These time windows always mark the 10 minutes that are left on the actual 1 hour candle and the first 10 minutes of the next uh, hourly candle. So usually it doesn't mean that it will always be like this, but usually these time windows can eventually be some kind of volatile, and usually these time windows mark um, the beginning of something. That's why I tend to frame my trades inside this time window. And yeah, it is important to look for these time windows, to frame your trades inside these time windows and expect something to happen inside these time windows. This is all taught by ICT. The only problem that if you want to if you want to search for it and if you want to learn from him, the only thing that is really hard to keep up with are the length of the videos, the and all the rants that he makes while he's teaching us, because he might he might be talking about something and then he changes the subject to another thing, and then you will have about 30 minutes talking about something completely different. And yeah, and in the last 5 minutes of the video you will get to the first subject that he was talking about. So that's why it's kind of hard to keep up with those videos. So yeah, price is really struggling here. So this is the typical NFP action, mm, which is a formation of a box. Whenever we have price uh, struggling inside a box, we can say that it is time distorting, which means that price is trying to gain some time, trying to um, entice more players to come in, those retail traders to come in. And usually, whenever a retail trader sees something like this, okay, price is going to the downside. It is um, forming some type of a bearish flag, right? And okay, price is just accumulating here to go for another leg to the downside. But honestly, what usually happens is the opposite. Price is just time distorting here, enticing more sellers. A lot of people trying to sell here, put their stops above here somewhere, and suddenly there will be a move to the downside, enticing even more players to get in, and then boom to the upside, boom, a fast and quick run to the upside. That's what usually in the normal conditions happens. So I will mark this as time distortion here. And whenever you see price like this inside of a box, try to do try not to do anything here, because honestly there's a 50-50% that price or it will come to the upside or it will come to the downside. So that's just, this is just a coin flip, honestly. So chances are not on your side. So meanwhile, ES and NQ, looking into ES on the 15-minute time frame, it really um, took out all the liquidity down below, while NQ is not even near it. So it is about 100 handles above what ES already did. So at this point, the only thing that you will have to do is wait for something, and it might eventually happen in the next macro, because we are about 30 minutes away from it. So this was an empty macro, nothing happened. I will mark this and we'll put here empty. So nothing happened here. So price is now reaching for these highs here. Right now, since we are time distorting here, I would only consider some type of longs if we get above this fair value gap and if we invert this fair value gap here, because it can happen that price take out these highs here and retraces back to the time distortion box. So I need to see the inversion of a fair value gap here to consider longs, and here we go. price came right at midnight open, and midnight open can eventually be the type of place where price faces some resistance as well. So we have another order block here too, and I want to see price completely disrespect this order block. See that midnight open price is completely and respecting it to the tick here. As you can see, price stopped right at midnight open. These are really important points where price tends to stop and to respect. There we go. Yeah. See, that was what I was talking about, and that I told you that price was trying to gather more sellers here, because retail traders see this down movement, and as soon as price starts to consolidate, oh, this is a bear flag. It will just continue to the downside, and yeah, it will do the opposite because we are gathering more sellers, more sellers, more sellers. Yeah, respecting this bullish, this bearish fair value gap here. So right now, which is the logical and most easier target? Well, the most logical and easier target is the first presented fair value gap. But as I told you before, there's a lot of stops here, a lot of them. So those players that saw the market here and started to sell here, all of them placed their stops here. And the algorithm tends to punish and attack these stops. So this is the logical, and this is the logic behind ICT. And to be able to get into a trade like this, there's something that we call, I will just put this in yellow because it got inverted. So this is now a inversion. There's something that we call OTE levels. OTE stands for optimal trade entry. And optimal trade entry we have 4 levels. I will put them to the right. Yeah, it's better to see them on the right. And these are optimal trade entries. The equilibrium, or 50% of it, 62% of it, 70%, or 79. So it means that we should search for something for price to come back into equilibrium eventually, accepting eventually a retrace to 62%. And if we see some kind of a retracement on these levels, we should consider a long position. And as I told you, it would be a fast movement to the upside here. Um, but since I told you guys that I would not be trading today, I'm just keep I'm just keep myself just keeping myself disciplined and just tape reading. But yeah, in normal conditions, I would eventually wait for a retrace back into this fair value gap here. I will. I can put some type of a schematic here. I would eventually put something like this. Just let me just check once again the OT levels. Yeah, it tends to be on the midpoint of the inverted fair value gap. But I will assume this one here. This is just a schematic. I will not take this trade. So waiting for the retrace. It can happen that price will just retrace for midnight open. Right now, respecting midnight open, as you can see. So at this point, if I was taking this trade, you should be tagged in. But since we are on a Thursday pre-NFP, and as I told you, this is a low probability trade. And as you can see, price is really digging to the downside here. stopping right at 62. This stop should be a bit more to the downside because the wicks can eventually do some damage on this last level here. I will put here low probability conditions because of free NFP. See, price is struggling here to respect the inverted fair value gap here. So yeah, this should be somewhere here. See, that's why. That's why we don't take trades on a Thursday pre-NFP, because things like this can happen. So you have an inversion structure here, but it did not respect it. It came to the downside, disrespecting it completely. A lot of damage is being made by the wicks. See, this is why this is the, how should I say it? This is the ultimate warning that you should not trade low probability conditions, because the idea is correct, but yeah, the algorithm tends to punish everybody here. It's almost impossible to to stay alive with these types of conditions. You should have some type of a stop like this or something like that. And yeah, that's not ideal, honestly. So the idea is kind of correct. I believe that we will eventually take out these highs here, but the way you connect with the markets and the way you enter your trades, it's very hard. Yeah, it's very hard because the algorithm is really programmed to get those stops. Looking at the looking into the 5 minutes, yeah, the 5 minute is kind of ugly as well. The 5 minute is kind of ugly as well, as you can see here. Not delivering. This should not happen in normal conditions here. That's why I avoid to trade on days like this, because you will get frustrated, because at the end you will be right, but the algorithm will find something to take you out of the game. There we go. See, so the idea is kind of correct. We already reached almost those relative equal highs, but the way the market drives, it's it's kind of weird today, and that's why we call this low probability conditions, because the main idea is correct. You know where the market will go, but the way and the form that you will have to execute, yeah, it's quite impossible, because in normal conditions you should take a OT level here. So the first entry, you can take the first entry at 0 0.5 or eventually at 0.62, and your stop should be below the last OT level. So below eventually this candle here or this one here. But see how price really came? It wicked below just to take out. Everybody was trying to buy as well, and then it displaced to the upside, and it will reach, with no doubt, these relative equal highs here. Remember that I told you that the first presented fair value gap was the low hanging fruit, the um, the first target, but we have some more here. So even the only way that you could eventually be safe taking this trade was to frame your stop below the the low. But yeah, this makes no sense to me because you would ruin your risk to reward. See, it would take a risk to reward to 1.73, and that's not that's not permissible for my type of rules. So in normal conditions, price should have came here at equilibrium, eventually taking some wicks inside this level here or this one here. Yeah, but in normal conditions, this should not happen. So this is one of those days where you know where price will go. You know exactly what it will do. But in the meantime, uh, it will difficult your life and difficult the way you execute by taking you out and knowing that your stop will be somewhere here, displacing aggressively to the downside, and yeah, taking you out of the game. That's why this is a non-tradable day for me, because the probabilities are low, and whenever I can anticipate these low probabilities and these types of low probability, I will only try to read price action and not interact with it because yeah, this is what happens, and you could eventually um, see by yourself that I was expecting a reversal somewhere here when price was taking all this time here, gathering some more lows, some gathering some more short sellers here. But yeah, it's very hard to interact with price when it is doing what it is. So see, price will eventually come for these highs because, like I told you, everybody who's making money since the beginning of the stream and the beginning of the open bell the open bell must be punished. The algorithm will not allow everybody making money at the same time. So it must it must eventually punish someone. And the first victims are usually those who are making money since the opening bell. So here you have it, and there we go. It will reach for relative equal highs and eventually reach a little bit higher in side by side liquidity here. So we'll just let the market reach for these highs here, and then I will eventually close the close the stream because yeah, at this point we are just reading price, but at this point this is not worth over our time, and you should you should know when the market is worth of our time and when it's not. So notice that we are reaching for the 1050 macro as well. I will just put this to the upside here. And the 1050 macro can eventually help us to get above price. But for the macro to be efficient, this one should be respected. Otherwise, it will come back here. And yeah, let me just check the 3 minutes just to see if I can see something here. We have a big order block here. Yeah, it might get respected. Look at the price is trying to support here at event horizon and eventually at 8:30 open as well. We are already inside the last morning macro. Let's see if we get another push to the upside. I'm still waiting for these relative equal highs to be taken. And we are still inside the macro as well. And for now, 8:30 open event horizon is as well being respected. But as you can see here, the first presented fair value gap is acting as a resistance right now. So it usually does whenever price is below it, and it eventually acts as support when price is really above it. But yeah, I liked how I performed today with the price action tape read. Um, yeah, I was eventually looking for some type of a reversal here, and the reversal played out, but the conditions to join that reversal were not present. Honestly, price should never give us this type of retrace, but since we are on a Thursday pre NFP, it usually does these type of things, um, because that's how the algorithm works, and probably we will have a better price action behavior on Monday or on Friday post NFP. So yeah, the 1052 1110 should macro should drive price to these relative equal highs. So imagine that you are a short seller since 9:30. At this point, you would be praying for this stop, your stop, not to be hit. But unfortunately, it will. That's inevitable at this point. So whenever you have that feeling, oh, god damn it, my stop will be hit. Oh, price is coming and it's driving to my stop. Will it really reach that? Yeah, it will. It will. Uh, Keep that in mind whenever you have that feeling on yourself, and whenever you feel that gut feeling attacking you. Yeah, just close your position because you will get hit. That's inevitable. Sooner or later, it will happen, and that's what's happening for those who are shorting since 9:30. So the macro really giving us some fuel to the upside. Now I just need to see some type of a push here, disrespecting the first presented fair value gap. In normal conditions, that would happen, but since we are on a Thursday pre NFP, it might take some more time. So since the beginning, this was since 9:30, this was the main draw that I pointed at. Um, I was expecting some type of a inversion here to happen since we were playing inside of a 4 hour bullish fair value gap. It really did. It really time distorted it a little bit here, gathering some more short sellers, but eventually it came out. It offers some type of a breaker, but not a clean one here, with this green candles. But yeah, the retrace that eventually smart money should take was not clean enough. It was too harsh of a retrace, um, punishing smart money traders. And yeah, as soon as all those stops were triggered, price just pushed to the upside like I was expecting. And now we are just points away from those stops that are here. So I'm kind of content with the read that I made. Unfortunately, this is a Thursday NFP price action, pre-NFP price action, and since the beginning of the stream that I said that I would only tape read, I would not take any trades, and I'm proud of it as well because yeah, that would be very hard to catch, honestly. Um, this action here would be very hard to catch. I was waiting for some type of a retrace here, but the retrace should be cleaner. It should never come out of this inverted fair value gap here. It was too harsh and too volatile. the only the only way that you could eventually profit from this move here is if you had your stop below these lows. But for me, that doesn't make sense because it would be a mega stop and it would ruin your risk to reward ratio. So even if you took the retrace to the midpoint of the inverted fair value gap, yeah, that would be a terrible risk to reward ratio. Yeah, imagine taking a stop like this. That makes no sense. Yeah, you can eventually say, oh, but you could eventually take this fair value gap here. Um, yeah, in theory, maybe, but since we kind of rejected this first presented fair value gap and we run all this liquidity here, yeah, at that point I was not sure that yeah I was able to take out this one here. But yeah, I'm just waiting for price to take these relative equal highs, and then I will eventually close my stream as well. The day is done here. There's nothing more to see. Tomorrow it will be interesting to see because there's a lot of liquidity, especially on NQ. There's a lot of liquidity here below. There's a lot of liquidity on the sell side. And I'm just curious to see where the NFP and that manual intervention will trigger us. Yeah, keep in mind that someone shared with me a news here that yeah, that's a tweet from Trump, and he's saying that he will be meeting with some guys from China for another reunion about trading conditions. So expect some crazy thing to happen on price action in the next couple of hours as well. So this has been quite frequently. So expect that as well. Keep in mind and stay safe about it because yeah, lately Trump and all the U.S. government they have been playing about trading rules and trading things. So yeah, keep that in mind. I'm here just waiting for the last push to the upside. And you can see that time window here. This macro really, really got respected here. Yeah, it seems like the market is playing a little bit here. It usually does, honestly. Whenever it's some ticks here below where it should be, it gives some more hope for those ones that have their stop here. But usually that hope will not last long. So yeah, guys. Well, we have 2 minutes left inside a macro. After this macro, I will close the stream. There's no point for me being here anymore. So I will end this session right at 11:10. So for those who were present and for those who stayed here for me and interacted with me, um, thank you very much. It was a pleasure to be here with you guys. I will be here tomorrow once again after NFP action. and and yeah, try to stay safe. Keep in mind that Trump, um, not Trump, but some representatives from Trump will work some kind of a deal with China. So it might happen that we will face some more hard conditions here, especially on S&P and NASDAQ. So yeah, keep that in mind and have a good day and a good afternoon. And if there's sun in your country, if there's sun wherever you are, yeah, just go outside and enjoy it, because the market will not give you anything today. Nothing certain, nothing high probability. It will just entice you and deceive you. So I hope you will have the rest of a good day, and yeah, see you tomorrow. And thank you for being here. And I count with you for tomorrow's action. If you're not subscribed, and if you didn't gave your or you didn't give your thumbs up, just give it, um and subscribe to the channel as well. And I hope you liked it as well. So see you tomorrow and have a nice day. Thank you.